Good afternoon. Today is Monday, November 13th, 2006. This is Brian Shannon speaking from Alpha Trends. On the screen right now, I've got the Nasdaq 100 Trust, and you can see that the Nasdaq finished with a pretty good little gain in here today. And in fact, it was good enough to bring the market to another new closing high for the year. You see the highs back in January were 43.31, and last week the intraday high was 43.35. So today we had a nice, strong performance from the Nasdaq 100. If we look at that 10-minute time frame, I was pointing out what looked like the potential to be a head and shoulders pattern. However, that did not occur. Instead, we got buyers that were still around from Friday afternoon. We had a nice rally off that rising 5-day moving average. And a lot of times that 5-day moving average acts as support intraday when we have a strongly trending market. We've seen that numerous times in this bull market over the last few months. So the buyers were back in control, and we saw that the prior little level of resistance here did become support on a slight pullback that we saw. So the people who've been looking for resistance at these prior highs and saying that, well, we're at resistance, are now wrong, because that was just a potential level of resistance that the market rallied back above. Fortunately, I didn't come in and fight the trend again today. Had one little day of detour based on who knows what it was, but the market trend is clearly higher, and if you're fighting the trend, you're going to have performances like I had on Friday. So the buyers remain in control of the Nasdaq, S&P 500. We see the same thing. The market keeps getting up towards this 139 level on the SPY. It hasn't broken it yet, but it's looking like the tests are becoming more frequent, and that makes it more likely. The more times that resistance is tested, the more likely it is that that level of supply that's found there that's acting as resistance will be worked through, and the buyers will be able to push the market higher. So we still have some resistance up near 139, 139.20, I guess you could say. Maybe 139 to 139.10. Breaking past that, though, I think we're going to see this market extend its gains once again, and the people who've been looking for the double top are going to be wrong once again. And again, a double top would occur only if, in hindsight, we could see it break below 136. So the market trend remains higher. It looks like the S&P is getting ready to break out like the Nasdaq did today. We've got the semiconductor holders that had a strong performance today, and they're getting ready perhaps to come up and push past that 200-day moving average. If this market can get above 34.45, it'll put this market, I think we have to start looking at it a little bit more positively. It hasn't broken down. We've seen today a couple of the semiconductor stocks, Novellus, NVLS, and then Lam Research, LRCX. These are the equipment manufacturers. We saw both of these have big days, and it didn't lead to a breakout in the S&P in the semiconductors, but it's looking like perhaps we're going to see a move past this what's been pretty good resistance here, 34.45, 34.50. We can also start to see that maybe we're seeing an inverted head and shoulders pattern. So I think breaking past 34.45, I think we've got a lot of short sellers in these semiconductors, and I think they can get squeezed pretty good. So I'm not turning bullish here. I'm still cautious on the group, but the picture seems to be changing somewhat, and when we have Lam Research and Novellus breaking out the way they are, we have to look at the overall market and say, the overall group that is, and say, what is the potential bullish scenario? The potential bullish scenario is breaking past that 34.5. If that's the case, then we've got that head and shoulders pattern that gives us a target about $1.60 away, which would then, or $1.40 away rather, which would lead it up to about $36 a share. So let's continue to monitor that, and that would be nice to see, obviously, because the rest of the market is, the Nasdaq, the S&P 500, now the MidCap, they're all acting very strong. The MidCaps are, testing this resistance from the 145 level that we saw a couple weeks ago, in late October, and it's expended some energy coming up to this level over the last week and a half, but it's digesting these gains very well too. It rallies up, pulls back, higher highs and higher lows. Now perhaps we're going to see a little bit of sideways action underneath this before we actually do get a breakout. I think the market acts good, and we've got to continue to be open-minded to going either direction based on what the market tells us. That's the way you always want to approach it as a trader. Now, concurrent computer, we've been looking at this one. I've been saying it needed to get above 203 to 205. It didn't do that. It looked like it was building a nice little launching pad. The stock instead broke down today, so no reason to continue to be involved in that one, obviously. ChinaMed, we got involved in at $26 a share on last Thursday and got stopped out today at $27.80. So nice gain in there, about a $1.80. That'd be about, I guess, 7, maybe 8% in there. Ladenburg Thalman, symbol LTS. We've been involved in this one at 136 for about 4 days now, and our stop was at break even. I think you can keep your stop at break even at this point. No reason to change anything there. ALNY. This is, let me try it again. Alnylam Pharmaceuticals. Alnylam Pharmaceuticals had a good day. We were looking for the stock to break past $19.60. It did that early on and had a very nice rally, almost up to our target of $21 a share. But the stock pulled back, and again, I'm going to point to the pivot lines and show you that I think you ought to look to be selling at least part of it near R2. And obviously, if you sold some at R2 today, you didn't get out anywhere near the high. But if you're still in the stock when it's rallying this strong, one thing you might want to do when you're waiting for it to get to your target or whatever is put a trailing stop on it. That's a way of being able to lock in the profits here. But the stock still acts strong. I would say that now, if you're still holding your shares, your stop ought to go at about $19.85 in ALNY. We also got involved in Dendreon today, symbol DNDN. Even though it gapped higher, I sit above 535. I'm going to say we got involved on the pullback at 535, and then we're stopped out at 523. Hopefully, you didn't take the trade. Realistically, we're typically, I typically say don't chase these stocks on these gaps, but maybe you bought it on, after it pulled back and started rallying a little bit. But if you did, stopped out of Dendreon with a small loss. RealNetworks, we were looking to buy above $11.50 today. The high was $11.50, so there was no reason to get involved in RealNetworks. We were buying it above $11.50, and again, the high was $11.50, so it didn't meet our entry criteria. GVHR was our one short for today, and this stock we wanted to get short below $22.10. That did occur, and I had suggested a stop at $22.32. I think you could lower that stop to about $22.28 on GVHR.